right, good morning, everybody. My name is Brittany Stokes, and we are here today with Christopher Hart, who is a financial service professional and runs an insurance agency nationwide with several hundred agents. So we are here today, and we're going to talk about a really important topic. We're going to talk about how money grows, and more importantly, how to use an unfamiliar product in life insurance to grow your money. How you doing today, Chris?
I'm doing fantastic here in Atlanta, Georgia. The weather's great. Flew in yesterday morning. We had an event at the Epic Center, right?
Yes, it was awesome.
Fantastic event. It's good to get back out here, man. With COVID-19 kind of subduing and dying down a bit, getting back into the street, shaking hands, talking to people, and getting back to what we've done before 2020 happened.
Yeah, it's definitely been a year. And for all of the audience out there, I want to let you guys know we are streaming live on Manifest TV, on Instagram, and also if you have questions while we're doing this, you can actually call in. The number is 470-251-4647. So call in with any questions. You can also comment questions. We'll be glad to answer. So let's get right into it, Chris. I want to know, just give us a little bit about your background.
Absolutely, my background. So originally from California, born and raised in California. Prior to working in financial services, my background, grew up in a city called Compton, California, a little small town in Los Angeles County. Yeah, straight out of Compton, right? Pretty infamously known from a couple of different rappers and artists, right? But grew up in Compton as a kid. Grew up in a household of a mom, dad, and a stepfather. So contrary to other stats out there, I grew up with two fathers. So as a young kid in Compton, and played some college ball. Came back home to California, started working, and I found myself working in retail originally. At a retail job at a company called Circuit City back in the day.
Circuit City,
If you're a Gen Z, you probably don't know what Circuit City is. Gen Xers know, millennials know if you're an older millennial, right? New release Tuesdays. But transitioned from there to a company called Apple. And at Apple, I became a business manager, and got to a point to where started making some good income in my career, and happened to fall into financial services in an unfamiliar way also.
Oh wow, that's awesome. So, tell me, what really led you into the path of financial services? What was that turning point?
Yeah, for me, it was actually a buddy of mine. I didn't grow up in a household where we talked about money and finances. It just wasn't a topic in my household growing up. My years of high school and some college never had a class on personal finances. And what I found is that a buddy of mine, it's crazy the way it worked. My wife and I were at church one night, and we were volunteers in our church, and we're talking about we're at a Bible study Wednesday evening, and a buddy of mine comes to me about a company he's working with within the financial services industry called PHP Agency. I asked him what it stood for. He said people helping people. I thought it was a pretty corny name. People helping people. Like, bro, what do y'all do, right? And he said we help families make money, save money, get out of debt. At the time, I was 26 years old. I thought, okay, as a new husband, I should probably be responsible with money and finances. So why not? Let me hear you out. So we had a conversation the following Sunday after church. Brittany, he blows me away. I said my mom and dad did the best they can by me, but never really had discussions about personal finances as a kid growing up. And so it made sense to me. I became a client right away with a company called Nationwide Financial, pretty large company, and AIG. And I became a client, and then eventually he followed up, and long story short, I became an agent.
Wow, that's fantastic. And so tell me a little bit more, really exactly what you do. Like, how do you help families?
Yeah.
What exactly do you do?
Yeah, so I have an agency. I run an FMO, financial marketing organization. What we do is we market financial products on behalf of companies such as AIG, John Hancock, Allianz, National Life Group. And Brittany, right now in our industry, there's a huge problem taking place. The average agent in the industry is a 60-year-old white male. Nothing wrong with being 60 or being white, but here's the problem. They've got one foot in, one foot out, and they're about to retire. And so these larger companies I mentioned, like AIG, John Hancock, National Life Group, they don't care what color you are, how old you are, or where you come from. All they really care about is distribution of financial service products. But they know people buy from people who look, talk, and act like them. So if the average agent is a 60-year-old white male, who is he probably marketing to?
Probably that demographic, right?
Exactly, right? So who's being left behind? Everybody else.
Me for sure.
Right, you for sure. You are a millennial, minority female. Yes, you're being left behind, right?
Yeah.
So you got Gen Zs, Gen Xers, millennials. You got women. You got minorities. And so the firm that I represent, we just in my office alone in the DMV area in DC, Maryland, Virginia, we represent about 26 different nationalities.
Wow, that's
yes,
fantastic.
Yes, and the larger firm I work with, we just did our census study about a month ago. Companies over 41% Latino.
Wow.
32% African American, over 13% Caucasian, and 54% female.
Wow.
So you don't hear about
that.
women being the majority in financial services. So obviously we're a different type of firm who wants to attract a different type of agent.
That's fantastic. And so I really want to know, when was the first time you really experienced that you were changing lives and really helping people on a larger scale? What was that? Do you remember that first time?
Absolutely. It's funny you say that, man. I worked for some big companies, man, and one of the best companies I ever worked for was Apple. And Apple did a great job of helping me understand how to manage vision and purpose and certain things. And so you work for Apple, man, you're juiced up, man. Like, you want to sell MacBook Pros, iPads, iMacs, Apple Watch. You're an Apple fanboy, fangirl.
Yeah.
And I'm on the verge of wanting to get an Apple tattoo at one point in my career,
goodness.
right? It's crazy, right? They did a good job of selling me the vision on why Apple is taking over the world. And so I'm there, I'm servicing clients and business owners with iPads and MacBook Pros, and I was making an impact on the world, right? To a certain extent.
Yeah.
Helping people further technology and advance what they're doing. I got started in financial services part-time as a life insurance agent, part-time. And one of my first families I helped was a couple in Fontana, California. If you're in Fontucky, you gotta be from Fontana to know what Fontucky means. Fontana, California. This couple was a couple of mine, a buddy of mine named Chris. And him and his wife, they have 2 kids, and they get some policies from me. They get a life insurance policy. We sell some strategies for their family to build wealth for the future and seal their financial legacy. And we walk away from that transaction, right? And they're thanking me, they're hugging me. I'm like, this felt so good. And what's crazy about it is this, Brittany, I walked away and I made pretty good income doing it, which draws to my belief system of those who serve the most always earn the most. I served the family, I made good income, and I said, wow, I like selling iPads to doctors and MacBooks to real estate offices.
Yeah.
But you know what, man, when it comes down to selling a legacy for a family and servicing them around financial education, that just felt better. And so I knew at that moment, it was 2013, I want to build a life around this industry. And here we are 7 years later.
That is amazing. I love that so much. And I want to remind all of our viewers out there, if you have questions for Chris Hart, you can actually call in. Once again, the number is 470-251-4647. Call in with your questions. We'll make sure that we answer. You can also go on our IG and ask questions or Manifest TV. We'll make sure we get the questions answered. So we're here to talk about money, right? So I want to know, can you just break down the basics? How does money work?
Well, how does money work?
Yeah.
That's a broad question, right? But I will say this here: money.
How does it grow?
We aren't taught the money game. Oh man, it's crazy, man. And even yourself, right, Brittany, you have a master's.
I do in business.
In business. So tell me, let me ask you something really quick. Master's in business.
Yeah.
What classes taught you about how money grows?
You know, as much money as I spent on that degree, on my multiple degrees, I never really had the core foundations of money. Never really got that.
You spent some good money on that education, right?
Yes, I did. I did. And a lot of time as well.
Yep. So we don't know how money works. So we teach simple financial concepts. I believe that we're a financial educational firm, really. We just teach. And at the end of the day, I believe you can't say the right thing to the wrong person. And so, of course, I work in sales. Of course, I offer and sell financial service products, but we just teach. And so one of the simple concepts we teach is the 3 ways money grows.
Okay.
I don't care how much money you have, where it's at in this earth, it's somewhere in 3 different ways of growing in the context of how it grows, right? So it has a disposition to grow at a level of either fixed, variable, or index.
Okay.
And so we teach our clients about fixed accounts, variable accounts, index accounts. And so fixed accounts, normally for anyone watching this right now, is a traditional account like a bank. You got your checking account, savings, CD, money market. For some of you guys out there, maybe you got some money in a shoebox upstairs or under the mattress. Some people still, because I had a client the other day said they put money in the freezer.
Wow.
I said, the freezer?
The freezer.
That's old school right there. Old school down south.
I don't think I've heard of that one. The freezer.
Put money in the freezer, right?
Wow.
And so
that's safe.
It's safe though. It's safe, and that's a plus to it. The pro is that your money's safe in the freezer. It's safe at the bank. It's backed up by the FDIC, right? It's not going anywhere.
Right.
The downside to it is this though. It's not growing much. So we're saying, how does money grow? And so traditionally, my mom and dad would say, hey, get a CD account, get a money market account. Old school parents, like maybe your grandparents said, hey, get a CD, and it's growing between maybe 0 and 1% if you're lucky, not even outpacing inflation. With the way we're printing money as a nation right now, inflation is hyperinflated. It's at around 4%. Last reports reported,
wow.
And so you're losing money in a sense because it's not growing much for you. And so fixed accounts aren't the best way to grow money. Now you need a bank or a checking account to manage your household finances. That's about it. The second one's variable. Now, for most of us, Brittany, variable accounts come in the form of a 401k, an employee-sponsored account, like an IRA or a 403b or a TSP. Some of us invest into Bitcoin, cryptocurrency,
that's
right?
Big.
So, yeah, it's
right
really
now.
big right now, really big. You may have mutual fund stocks. And with the plus, obviously, to investing into Bitcoin or putting money into a variable product is that it can grow. You can definitely experience growth there. The downside to it is that when things go up, they have a tendency to sometimes go down.
Yeah.
And you can lose money. I'm a young guy. I'm 34 years old. I've experienced 2 market crashes in my lifetime. One was a dot-com bubble burst, late 90s. The markets are up, and sites are launching left and right. 2000 market crashes. 01, the Twin Towers fall in New York. 02, we go into a recession.
Wow.
What got us out the recession was war, really. War, right? The great war machine of the United States economy. So we got out of the recession through war, and then in 07, 08, what happens? Housing market bubble burst. You work in real estate, so you understand how that took place. And so you can lose money there, obviously. And then the third one, unfortunately, is not as popular as the first 2. It's called index. An index with an X, not indexes as in S&P indexes. And so when we say index, it's 2 products, a fixed index annuity and index universal life. And these are both insurance products that have a disposition to not lose value.
Wow.
So the plus to it is that it's safe. You will not lose money in a fixed index annuity or an index universal life insurance product. What's the downside to it? It's capped on growth. Mm-hmm. So in some cases, you may have a cap of 12%, a cap of 9%, but a floor of 0. So say the market, the S&P 500 does a return of 25%. You won't get 25%.
Okay.
If your cap is 10, you'll get 10. But say the market crashes, goes down negative 25%. What do you lose? You lose nothing. And so part of our concept is if you had an opportunity to grow your money fixed, variable, or index, where would you put most of your money? And most of us are overexposed to variable account. It's all we know. We know our 401k, our 403b stocks, mutual funds, our Robinhood account. And so part of our concept is how do we teach people to diversify and look at other options that are available to them out there when it comes to growing wealth.
Wow, so many nuggets in that. I hope you guys are taking notes, okay? Once again, put your questions in. But I want to know, can you explain to our viewers the concept of the 5 homes of money and just educate those who are unfamiliar with that?
Absolutely. So one thing, we teach our system, we teach concepts based off of a level of sequences, right? What are your next 5 moves when it comes to growing wealth or to building wealth for your family? The first one is you got to identify how does money grow. So once you identify, okay, I understand that money goes fixed, it goes variable, it goes index. I need fixed accounts to manage my household finances. Okay. I need variable accounts to maximize growth. How much money can I afford to lose? And I want some index accounts also where I have some guaranteed growth or no losses. And so once you identify how money grows, the next question is, which financial home should I grow my money in? Mm-hmm. And so there are 5 financial homes out there that we can grow money. One is called the bank, obviously, right? The bank, which is fixed. Yeah. You've got the stock market, which is variable. You've got qualified plans like a 401k, 403b, IRA, which is also variable. You've got real estate, which is a great investment vehicle, right? Which is also variable.
Gotta love that.
And you got life insurance, which is index. But how do you grow money in life insurance, right? People always ask that question. Yeah. And so when you look at these 5 homes of money, right, you got, like I said before, you get the bank, you got your stock market, you got your qualified plans, you got your real estate, and you got your life insurance. There are 5 key characteristics that measure certain trackers within these homes. So the first one being what we call liquidity. Do I have access to my money? Can I touch money in that account? when I need access to it. Within the next 24 hours, can I access cash? The second one being safety of principal. Can you guarantee me safety? If I put money into this account, stock market, if I invest money into a real estate property, can you guarantee me safety of principal? Will I not lose money? Then you got taxes. You got tax deductions. You got tax advantages. Taxes are a huge part of not only building wealth, but keeping wealth. There's 3 ways to get taxed on your money. You can get taxed now, get taxed later, or we call it tax advantage. We'll talk more about that. And then the last one we have is really just growth, which is important, right? Because if inflation's at negative 4%, if our account sitting in a home, is it outpacing inflation? It's a question we got to ask ourselves. And so part of our concept here at PHP agency, what we do as our firm is we help teach people, okay, cool, what are the 5 homes of money? Okay, cool, what's my goal? What do I want to accomplish? Is it building long-term wealth? Is it retirement funding? Is it college for my kid? And based off my discretionary income and savings, how much am I putting into each home? What's going into my 401k? What's going into my IRA? What's going into a life insurance premium? And how can that be effective towards my long-term goals and dreams?
Wow, that's huge. I love that you are actually educating the community to make sure that they understand these concepts and how to move forward. But you did mention something on inflation with that fixed account. So can you explain how, if you have all of your money in that fixed account,
Absolutely.
how over time, I guess you could lose money there?
Yeah. Many people we talk to are not risk averse. They don't want to risk money. They experience a market crash, experience losses. So when we're afraid of risk, where do we go? We go safety.
Right.
Safety is like, hey, Bank of America. I trust Bank of America. I trust Wells Fargo.
Yeah.
So somewhat. I trust Chase. I trust Citibank, right? And so we put our money into a CD or a savings account. We see it in an account. It's giving us 0.004% interest. If inflation, the value of our dollar is dropping every single year. You got to realize this, Brittany. When we print money as a nation, when we do a stimulus bill, when we extend unemployment benefits, where's that money coming from?
They're printing.
We're printing money. The Fed's printing money. When you print money, you devalue it. A product that can be duplicated loses value. So if you can duplicate dollars by printing them out, you lose the value. So if we know the value of our dollars dropping, it's in an account where it's getting us 0.004% interest, it's losing value. And unfortunately, when we print money as a nation, guess who gets impacted more than anyone? Middle class, lower middle class. Because Brittany, if I'm saving money in a savings account, right, chances are if I'm a middle class American, I'm making $35K a year, $45K a year, $55K a year, $75K a year, whatever it may be, right, and I got money in checking accounts and savings accounts, and the price of gas goes up. I'm a single mom, 2 kids. I'm a working class individual, husband and wife, 4 kids, rural America. Gas prices go up. Food costs more, milk. Who's that impacting? The wealthy or the middle class?
Middle class. Wow.
So when we have money in these fixed accounts because we're risk averse and we don't want to stay away from risk, it has a huge impact on us. And the problem is you don't see it today, or tomorrow. Over time, the value of your account drops, and you look up and like, man, why am I still in the same position I was 2, 3, 4 years ago? And so part of our concept here, our strategy is how do we teach people to get out of that rut and get into a place where, okay, cool, how can I get into the game here, the game of money? How can I change my money blueprint? Well, I was taught as a kid growing up because in many communities, being an African-American male, right, growing up in this country here, we do not learn about money and finances.
Yeah.
It's just not taught. Our most of us, not all, but I can speak for myself, our grandfathers, our great-grandfathers, our great-great-grandfathers, our great-great-great-grandfathers may have been put into a situation where they weren't set up for success.
Yeah.
And so they weren't taught. And so it's up to us to seek out that knowledge and wisdom and learn for our generation.
Yeah, that's huge. You know, growing up in a lot of communities, they say, oh, grown folks talking, get out. So you don't really get
money
to
talk. This is money talk.
You don't get to experience and like sit at
Isn't
the
that
table
crazy?
and
Like,
learn.
I should learn, Mom. Like, I'm paying the bills. Get out of here. Like,
yeah.
can I learn how the bills are paid? How does money work?
Yeah,
that's crazy.
that's huge that you say that. And so, okay, so I understand that basically the value of your dollar, let's say you have, $100, it's not worth the same today that it is, in the future because of that inflation, right? But you mentioned life insurance, and so you said it grows, but you also said it's safe. And so what is it exactly safe against?
Yeah, okay, absolutely. Volatility of the market. Our markets are volatile. Like Bitcoin shot up to an all-time high this year and it lost value. A lot of people lost.
Yeah.
A lot of amateurs that don't understand cryptocurrency they lost.
Yeah. For
And
sure.
so for us, we're saying it's protection against market losses. So there's something called principal protection. There's a guy named Warren Buffett. You may have heard of him, right? Financial
Definitely.
guru, decade billionaire. If you read any of Warren Buffett's books, his articles, he's got 2 rules of money. He always says this. Rule number 1 of money is this: don't lose money. Okay, that makes sense. Check. Rule number 2 is don't forget rule number 1. It keeps it quite simple. The challenge is a lot of us are losing money because we're overexposed to losses. And so there's a terminology called principal protection in money. And so let's just say you had $100. We use simple math, right? You have $100. If you're watching this right now, you're at home, you got a sheet of paper, you got a notepad, write down $100, right? Put
it in the chat too.
$100, right? And let's just say the market crashes, goes down 50%. Is that someone calling in for us? Okay, let's answer that phone. Goes down 50%. If you had $100, Brittany, and the market goes down 50%, what do you have left?
$50
in your account. $50.
Yep, $50.
And they say you don't lose unless you sell. You heard that before?
I have heard that.
But your balance says $50. Follow me. Market recovers. So you got $100 down 50% on your sheet of paper. You got $50 left. Market goes up. Get the arrow going up. Goes up. Market goes up 50%. So you got $50. Market's up 50%. What do you have?
Someone said $100.
$100.
Yeah.
You got $75. What's half of 50?
25.
So the market was down 50%. It recovered. Full recovery on the headline. Full recovery. We're rallying. S&P's up 50%. You're only halfway back up to where you were. It takes twice as much growth, twice as much energy to get back to square one. So when we're ups and downs, volatility of the marketplace, we're losing money.
Yeah.
And so for us, if we can imagine an account that said, hey, when the market's up, I'm up. When it's down, I'm flat. Up, I'm up. Down, I'm flat, I lock in those gains. Up, I'm up. Down, I'm flat, I lock in those gains. Locking in gains of the S&P over 10, 15, 20, 30 years is powerful. If I can show someone a side-by-side comparison of the raw S&P, the top 500 companies, right? People call that sometimes America's economy in a sense, right? You got the Dow, the NASDAQ, I'm talking about the S&P. 20 years, raw growth, compared to an index that's capped at 10%. 9.5%, 9%. You'd be surprised the index outperforms it.
Wow.
With a cap, but because it has no losses, because it offers something called principal protection, you're winning. And I can talk for days about other financial institutions like banks, BOLI, bank-owned life insurance, or corporations, COLI, corporate-owned life insurance. Some of the largest institutions in America leverage life insurance to preserve and build wealth.
Wow.
So why wouldn't you do it in your home?
You said BOLI. Can you just touch on that briefly for anyone who maybe hasn't heard of that
If you're watching
before?
right now, you can take my word for it. You can Google it, BOLI, BOLI, bank-owned life insurance. Yes, your bank owns life insurance. Why does your bank own life insurance? Is it an entity that can pass away or die? Not really. Why? They want to leverage that fifth home of money.
Wow.
It offers liquidity. It offers safety. It offers growth. It offers tax advantages. So who wouldn't want an account that grows well, tied to the market, has no losses, grows tax-free, and is liquid, right? And so what's crazy is this: if me and you were in a place where, say, really, I'll give you an example, right? Say we want to open a bank. We're saying, hey, let's open a black-owned bank. Are you black?
I am.
I'm black. Let's open a black-owned bank, right? And so we open a bank, and we go to the FDIC for an application, and the FDIC is an institution that looks at our numbers and our accounting and says, okay, cool, is this bank worthy of being backed up by us, by the FDIC? If consumers come and give them deposits, what's the financial health of this bank? They measure life insurance as a Class A asset for a bank to own.
Wow.
A Class A asset. So if the FDIC says, hey, we'll back you up, your deposits, because a majority of your assets are in a Class A asset called life insurance, if that's the case, once again, maybe I should consider having a component of this in my financial tool belt. I'm not saying all my money, but I'm saying if I got money in the bank, I got money in cryptocurrency. I've got money in mutual funds, stocks, bonds. I should probably have a little cash in a product that offers that same guarantee.
Wow, that's fantastic. Thank you for sharing that. I don't think a lot of people would know that. So we do have some questions that came in, and so
absolutely. So guys, you guys know we are also live right here on IG live right here, and we're live right here in the studio. So
okay, awesome. And so the question is basically, how does one go about getting something like this? So can you explain the types of life insurance products, like what options someone would have if they wanted to do this?
First of all, find someone you trust. There are hundreds of thousands of life insurance agents out there, and I can't speak for them all. I cannot. And so find someone knowledgeable. I've been in the game 8 years now. I've made some mistakes. I'll be completely transparent right now, live. If you met me my first 6 to 12 months in insurance, I sucked. I was garbage. Do not come to Chris Hart in 2014, 2013. If you're one of my clients watching right now, I apologize. I probably sucked. But find someone you can trust. Find someone credible. Find someone who's been in the game or who has a mentor or a coach teaching them. I find many independent licensed agents out there who are kind of just independent. They got involved part-time. They have no license. They have no coach. They have no mentor. So if you're talking to someone about life insurance, make sure you ask them who taught you. Who taught you? How'd you learn about these products and services? Did you just Google something online? Did you just read a book and take it? Anyone can pass a licensing exam test, but to be really knowledgeable on some of these concepts, it takes time, it takes mentorship. And so if you're looking at getting into a product, whether it's term, you got term, right? Term insurance is very simple. It's anywhere from, say, 10 to 30 years. Some companies offer a 35-year product. Term is temporary. It's for a term. It expires at a certain time in life. The philosophy behind term is this. Brittany, I'm young. Say I was 30 years old. Our phone just dropped. Say I'm 30 years old, right? I have a term, right? And my philosophy is, Brittany, I'm 30 years old. I have a young daughter or a young son. If I were to die today, that would be horrible for my wife. The mortgage is due, car payments due, my kids are young, mouth to feed. I need a term policy to cover this liability. I'm a walking, talking liability. Because I'm a breadwinner for my family, and if I die tomorrow, that money stops. I need life insurance. So I get a term policy for 30 years. At age 60, that term falls off. It's for 30 years. But at age 60, my son is 35, my daughter is 36, my wife is 60 years old. Okay. Do they need life insurance? Maybe not. Maybe there isn't any for a death. He's a grown man. Hey, take care of yourself, son. Like, right? And at that time, I've had 30 years to build wealth. I've had 30 years to get to a point in life where I'm making money. I've got money. I've got mutual funds. I've got stocks. I've got wealth. I've got real estate. So when I pass away, who gets my inheritance? Guys, that thing does not want to stay up, right? It's going to keep dropping down. You got to put a little muscle to it. Put a little into it, Brittany. Maybe it'll stay on there in that section up there. But overall, I have the ability to say, hey. I have the ability to say, hey, I don't need life insurance anymore. At all. You good?
Yeah. You might just want to move it back a little bit. I think it's too close to your mic.
Cool.
Sorry, guys.
Cool. Hey, guys, we in the studio here, guys. Be patient with us. We got IG Live, Facebook Live, YouTube Live, Roku, Amazon Fire Stick, man. It's going off in here, man. So so we are making do for sure.
Awesome. Another question that came up is said, how old does someone have to be to own one of these products? Oh, well, I don't know if you were done. We kind of had some.
We were good. As long as you have a social security number, you're alive.
So what if I have a child and they're newborn?
Yeah, I think the last time we had our kid, CJ, son, it took about 2 weeks to get his social security number in the mail. So once he got a social, that kid had a policy.
Wow.
We don't play, man. Our household, man, we're building generational wealth. Like if you bear the Hart name, you have a life insurance policy on you. Why? Because you're going to die one day.
Right.
The most simplest way to pass down generational wealth from a selfless perspective is life insurance, because I'm paying a premium today to guarantee a better future for someone who's younger than me, my grandchild, my great-grandchild. And so we gotta get over the living the life of now, and say, okay, at some point in time in your family tree, somebody's gotta say, hey, I'm planting seeds for the future. I may not ever see this come to fruition, or see this tree grow.
Yeah.
But I'm going to throw down a couple dollars a month to get a policy in place that guarantees that we pass on generation. And many cultures, Brittany, I won't name on here on this live, but it's mandatory. You get a life insurance policy.
Wow.
And in these cultures, they own a lot of America. They own Hollywood. They own New York. I mean, if you can guess what it is, you can guess what it is.
Yeah, I think so. Wow, that makes a lot of sense. And unfortunately, like you said, people who look, talk, and act like us, our communities, definitely not mandatory where I grew up, okay? And so that's fantastic. So outside of the term, are there any other products that someone could other types of life insurance that someone could leverage?
Brief description here on this slide is something called ROP term, return of premium. I get a term policy, I don't die. So over the last time I checked, over 90% of term policies don't pay out.
Wow.
I get a term in my 20s and 30s, I don't die. And so that's why it's inexpensive. You're probably not going to die. Chances are you're not going to die next 20 years, right? You don't want to die next 20 years, right?
Don't plan on it.
Right?
No.
And so you pay this term policy for safety, peace of mind.
Yeah.
It falls off. The money was paid in your premium. So some people like to subscribe to a philosophy of ROP term, return premium. Mm-hmm. And so it's a product that says, hey, it's a term policy, 30 years. At the end of 30 years, if I don't die, I get all my money back on the full refund.
Wow. All your money back.
Yeah, so it costs a little more. It's a little higher premium. So you're paying a little more for the luxury of saying, hey, honey, we're buying this house. It's a $500,000 mortgage. I want to get an ROP term to protect the liability of this mortgage. This mortgage is a liability. If I die, my wife is stuck paying off a $500,000 home. But I don't plan on dying. So let's do this here. Mm-hmm. Let's get an ROP term, return of premium for a $500,000 death benefit for 30 years. So I'm matching my 30-year mortgage for my home. Next 30 years, if I pass away, house gets paid off.
Wow.
If I don't pass, which I don't plan on doing, guess what? I get all that money back.
Wow.
So a real simple way to help someone cover a liability and get a full refund, all of the deposits and premiums paid into that policy, which is pretty cool.
That's fantastic. I mean, coming from the real estate background, there's so many families that could benefit, from that.
100%.
But that many have never heard of.
Most people wouldn't mind buying life insurance if they knew I can get all my money back if I don't die. The challenge is this. If you're watching this now and you weren't aware of this, if you're not aware of it, maybe you're educated, maybe you have an MBA, maybe you're a high school dropout, I don't know. If you don't know, do your close friends, family, co-workers, and colleagues know? Probably not. So if you don't know, and they don't know, who's going to teach them?
Wow.
That 60-year-old agent who's retiring next week? Probably not. And so we go through our lifetime, through our 20s, 30s, 40s, never learning these concepts, and it's unfortunate.
Wow, that's crazy. And so we went over the terms, RLP. What if someone, let's say, for me, right? I have 3 young kids. What if I wanted to have something long term, like more than the 30 years? Is there something that I could utilize to do that?
Yeah, there's different options. There's whole life insurance. There's variable whole life. There's VUL, variable universal life. There's universal life. There's index universal life. Yeah, it can get kind of confusing, right? That's why I say you want to find a professional who's well versed in what he or she is doing and is able to offer you different options. But I would say one of the most popular products I like to offer to someone is either a children's whole life or an IUL. Okay. Children's whole life is a permanent policy. It's super inexpensive. You're saying, man, I just want life insurance. I want a $20,000 death benefit. Last time I quoted someone $20,000 for a whole life policy, it was around $6 a month for a kid.
$6.
$6 a month. This kid's got $20,000 in coverage for life. $6 a month.
That's cheaper than Starbucks.
Yes, cheaper than your grande macchiato upside down with a shot of espresso and caramel on top. All right, so it's cheaper than that, right? And so that's one option. Someone just saying, hey, I want simple life insurance. I want it to be inexpensive. I want it for life. Great. There's also an option called an IUL, Index Universal Life, right? That third way money grows. Okay. And so that's tied to a market index, right? And the S&P 500, where you say, hey, I want to participate in life insurance. I want life insurance. I want permanent life insurance. I also want to participate in the upside of the market, but no losses guaranteed. Okay. And so if structured correctly, you can structure a policy in a way where it's going to grow and blossom for that individual, where it's going to grow cash value tied to the market, where a kid has an opportunity to use that for college, use it for a down payment on a house, use it for just to have in a family trust, just to have money in case things happen, and to invest and to grow and build wealth in their 20s, 30s, 40s, and 50s.
That's amazing. I mean, a lot of people could have used that for college, right?
100%, they sure could, yeah.
Are there any other features, like, I know there's a lot to it, but are there any other key features or components that most people wouldn't know about when it comes to these
One
products?
of the biggest features that my clients are excited about when they learn about these concepts, again, it's finding the right agent that can teach these things, is a concept called infinite banking. I keep saying, when structured correctly, there are a lot of crazy guys and gals out there who sell life insurance. They sell these IULs and they're not sold correctly. They're either underfunded, or that's why just be, I don't want to say be careful, just be talk to somebody, who's knowledgeable, who you can trust, who understands how it works. But there's two components to life insurance, right? There's a life insurance part and there's a cash value part, right? And so there's a way to structure a policy, Brittany, where I'm going to maximize the cash value growth and minimize the death benefit. Not to get too technical on this call here today, guys, and it's live, right? But I can minimize the death benefit. What that does is it maximizes the potential for growth. And so once you do so, you can now leverage the policy as a vehicle to leverage for a down payment on a house, college for a kid.
Oh, wow.
And what's cool about it is this, to keep it as simple as possible, through technology we have here, is that if I've got $100,000 in my IUL, it's a max funded IUL, also known as a LERP, or infinite banking concept, or maybe becoming your own banker, whatever you want to call it, right? Different guys call it different things. And I can take $100K, I can take, say, $50K from that policy, from my cash account, and it does not touch the cash account. It's taken from a loan from the death benefit. So I got $100,000 cash in my account, I take out $50K, the $100K stays there and compounds growth as if I never touched it.
Wow.
Still tied to a market. Now, it can be very confusing here. We show our clients and break it down for them in very simple terms, line by line, detail by detail, for them to understand that, hey, you can leverage this vehicle to build wealth by using money from it, and the money stays there. Brittany, where in the world can I take money from an account that I save money in? It was tied to the S&P 500 growth with a cap.
Wow.
I took money from the account, used the money to go buy a house, rental property, start a business, college for kids. The balance stays there and keeps compounding growth for me. Only banks do that. It's called factoring. Look up factoring. Only banks do that. So if you're saying, man, I want to become my own bank, highly suggest to look into a life insurance policy, into a concept called infinite banking, and ask your life insurance professional, do you understand infinite banking? If they understand infinite banking, then that's somebody who's probably well versed in knowledge on offering you a product the right way and having it properly structured.
Wow, that's a lot of great information there. And so, what happens to, I guess, the death benefit in that case? Is that affected in that policy?
Yeah, so traditionally, to keep it as simple as possible, if you are familiar with life insurance, something called whole life insurance, with a level death benefit. So if I borrow money from the death benefit increases, and my payout decreases also. And so there's something called level and something called increasing. To not get too technical here, I will say here, in an index universal life insurance policy, Brittany, they're very flexible premium payments. You can put more into it, put less into it. You have a minimum, you have a maximum, you have something called a MEC. The maximum amount that the IRS allows you to put into the policy. It's a very flexible product. And they've innovated over time. Brittany, if you look at the history of life insurance from a permanent perspective, you've got whole life, and it advanced to more universal life, and you have an index universal life. So within an index universal life insurance product, you have the option of option 1, option A, also known as level, or option B, option 2, known as increasing, which says this: if I have a death benefit, I have cash. If I borrow money from the death benefit, I were to pass away, my family gets the cash in my account remaining, and whatever death benefits remaining there. I get both in a sense. Yeah. In a traditional level policy, a whole life policy, you may have a loved one that say, "Hey, that policy sucks, man. I took money out of it, and when I died, I only got the." No, that's an old school whole life policy, which is still popular in some senses. Some of the best companies out there offer something called a rider that gives you the option to convert a whole life into a increasing death benefit. But to make it simple, yes, you get both the death benefit plus the cash you save in your account when you pass away.
That's fantastic. So yeah, definitely. Once again, guys, if you have questions, you can call in. You can drop them in the IG or the Manifest TV. Let us know any questions that you have. We're going to get ready to wrap up pretty soon here. So you talked about businesses and big corporations utilizing life insurance, right? And so can you go over a little bit of the executive bonus and why a company would want to, put that in place?
Yeah, I mean, you gotta realize this, Brittany. If you want to learn about money, follow money. Like, hey, people don't get this. If you want to learn about money, follow the money. Where does the money lead to? Okay, you have these big corporations, right? And most companies, think about, I'll give you an analogy. If you were a CEO, and I'm courting you to come recruit you to come work for my company, we want you to change this company, right? We're a big tech firm, and we're going to offer you a crazy salary of $10 million a year. Based off our tax code, if you're making $10 million a year in income, is that a good thing or a bad thing from taxes? It's a bad thing for taxes. You're probably paying like $4 million. You're probably paying $4 or $5 million in taxes. You don't want to pay $5 million in taxes, do you?
Not at all.
So what do we do? How do we get around this tax code? Man, is there a way to get around it? Wow. How do we get around it? I don't know. How about we do this here? How about we offer you some stock options for compensation, so you can hold onto your stocks, and some capital gains taxes a little lower there. Okay, cool. Some portfolio taxes a little lower there. Okay, cool. How about we offer you a smaller salary? Let's say $450K a year. So how do you make up that difference? Let's offer you also an executive bonus, aka life insurance.
Wow.
So an executive bonus says, hey, Brittany, we'll offer you a life insurance policy because you're a key employee of ours, you're a CEO. So the corporation buys a life insurance policy for you, and when the compensation goes to you through a bonus, paid through a life insurance premium. And so that cash now becomes tax-free cash. And so if you double bonus it from a perspective of accounting purposes, and when it comes to a policy, you have an executive bonus in place, you can get to a point to where you're using life insurance as a salary. There's a famous coach, I won't say his name on here, but he's a coach of a pretty infamous team in football. They won a couple of national championships. He chose to get paid through an executive bonus instead of a high salary.
Wow.
He played for an NFL.
Makes sense.
He coached for an NFL team for quite some time, and went to the college rankings to go coach in college. He says, hey, I want to be paid through an executive bonus, aka life insurance. Think about it. The premium gets paid into an insurance policy, money goes tax-free. So how do you bring your overall taxes down? By doing that, right? And so it's pretty cool.
It's almost a huge tax savings. Yeah, absolutely. That's amazing. And so when it comes to the life insurance, by utilizing that, can a person protect their other assets that they have?
What do you mean?
Basically, let's say they, kind of what you talked about, if they own a home, or let's say they own real estate, or if they have a business. How can that protect them, in the future down the road?
Yeah, I would say any wealth that you can put into a vehicle, how do I put this? That can't be touched if you're sued. It can't be touched if you filed for BK or bankruptcy. Can't be touched if you divorce in most states. Some people are open to learning about those products. And at the end of the day, J.D. Rockefeller said something very, 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 very important that stood to me. You want to own nothing, control everything.
Wow. Own nothing, control everything.
And that's a deep comment. You gotta look into it. Own nothing, but control everything. And so that goes into your corporations, your trusts, and certain things. And I'm not gonna go into that today on this call, on this show here today. But from a wealth building perspective, man, you want to get to a point where you learn about these concepts, because how do you set yourself into a position for your family where you're building generational? How do you protect generational wealth? Brittany, I mean, as African Americans, right? We account for a large portion of our population, over 15-16% of our population, but less than 1% of the wealth.
Wow. Yeah.
Why is that? We don't know how to keep money. We're college educated. We go out there. We get high paying jobs, 6-figure income jobs. We're engineers. We're lawyers. We're doctors, and we spend. We don't know how to save correctly, and when we do save, it lasts one generation. And so how do we set ourselves up in a position where we can build wealth and put it into a position where it's protected from taxes and certain things that are legally done by other companies, by other people, other institutions, other communities, and pass down more generational wealth to our children, and empower our kids to go own something. Go own a building, go own some real estate, go own a couple of businesses. If you keep doing it, it takes a long-term vision Because you may not see it in your generation, but you'll be the J.D. Rockefeller of your family.
That's awesome. So we actually have a couple questions that came in. So one of them was, should you get life insurance through your job?
If your job offers life insurance, I would take it because it's usually group supplemental insurance, something that's supplementing something you already have. Think about vitamins. Vitamins supplement. You should be getting your vitamins through what? Your food, your diet. Vitamins are a supplement. Protein supplement. You should be getting protein through meat, dairy product, wherever you eat, vegetables. Maybe I don't know if you're a vegetarian. Whatever you eat, pescatarian, you eat salmon, right? You eat fish, right? That's your protein. So if an insurance policy at a job is a group policy, it's supplemental insurance. What is it supplementing? Your individual personal policy. So many people I come across, they say, hey, I have life insurance in my job. Okay, that's like supplemental. It's like, hey, maybe 2 times your salary if you die, 4 times your salary if you die. You're paying $3, $4, $5 for it. It's very inexpensive. When you leave your job, it does not go with you. And so many Americans experience the loss of a job in the last 15, 16 months because of COVID. When they lost their job, they lost their life insurance coverage.
Wow.
What if during that lapse, you got cancer? What if you were diagnosed with something? You're uninsurable now. And so it's so important to have an individual policy outside of your job. I don't care if it's a term for $25 a month, it's a whole life, whatever you choose, whatever's right for you, whatever your professional life insurance agent recommends to you based off of your financial analysis and based off of your lifestyle and your budget and what you can do and what your goals are. I highly suggest to have a permanent policy that goes with you wherever you go.
Wow, that's great. And so basically, you want to get it on your own because if something does happen, you could be uninsurable or something like that. Okay, cool. Absolutely. That makes sense. And so one of the next questions says, what about life insurance that the bank offers? How is that?
Same thing. Banks have an opportunity to offer group supplemental insurance.
Okay.
And so it's usually cheaper and inexpensive. It's usually a term policy. And in some cases, if you're a member of that bank or that credit union, you can get a policy for that credit union. So as long as you're a member, it's a good way to supplement also a policy. So say your job doesn't offer life insurance, your bank does. Your bank can offer some more supplemental insurance. It's usually term. So your term doesn't last forever, but it's usually a pretty good rate for you. And I recommend having something more permanent outside of that, but it's also a good way to add additional coverage if someone who wants to pass down more.
Okay, so someone could own like multiple policies?
Oh, 100%. My wife and I own, I don't know, 7. Our household, awesome. 7 to 8, 9 policies of life insurance.
Wow, yeah. I don't think the average person would know that. Okay, cool. How soon can you have access to the funds that are put away into a policy?
As soon as I just structured a policy in a way for a client, had access to cash by month 6. Month 6. It was a front load. We call it a front load. So when you front load a product, you put a large sum of cash into it day one. When it's structured in a way where you're minimizing the death benefit, increasing the cash value, again, minimizing death benefit. When I say minimizing death benefit, I'm also saying AKA insurance agent makes less money. So I'm minimizing the death benefit, the insurance agent makes less money. Everyone out there is not trying to make less money because they're short-minded and taking care of clients. They have a finite mindset to get paid big money today and not take care of the client long-term from an infinite perspective. And so if you find the right agent that can structure a policy for you where it minimizes the death benefit, if your goal is to build wealth and cash value in an account, you minimize the death benefit, you max the cash value out, you get access to cash as soon as year 1. In some cases, by month 6, you're getting access to cash in an account, which is pretty cool to have an account growing between 0 and 9% that has liquidity by month 6 or 7. No 401k is going to offer you anything like that. So to have that access and to have the infinite banking concept applied to it, so you put money out but it stays there, it's pretty sick.
That's awesome. So much great information that we had today. I think we're going to get ready to wrap up here. The last question says, if someone basically has a bundle of insurance, should they still have something else outside of that? How do those, like let's say they have car, home, and life? Again,
Brittany, the right agent is going to ask more questions.
Okay.
If your agent says, cancel your insurance, bro, have you seen it yet? Like, is it good for me? Is it a good policy? Does it fulfill my needs? Cancel that guy and get insurance to me. Red flag. Mm-hmm. Red flag to run. To my opinion, run. if you're going to be an insurance professional, you're going to assess my entire outlook on what I have in my insurance portfolio. Look at what I currently have with State Farm, New York Life, Primerica, AIG, Nationwide. So whenever a client has a policy, Brittany, I look at their policy they currently have. I ask questions. I say, okay, cool. Why'd you buy this policy? I wanted protection for about just insurance. Okay, cool. You have a term, 30-year term. It's a pretty good rate. 30-year term. Okay, cool. It does not have living benefits. Do you want living benefits? Chris, what are living benefits? Long-term care, disability, you get sick, cancer, heart attack, stroke, you get access to your death benefit. I do want living benefits. Okay, cool. It may make sense to replace this policy because your policy is outdated. Like the policy does have living benefits. It's inexpensive. You should probably keep it.
Okay.
Now, do you want to add a permanent policy on top of that? We can blend now. You got your term to cover liabilities right now. It's cheap and expensive. Let's add on a max funded IUL to maximize wealth building for your family next 20, 30, 40 years. But the wrong agent says, hey, cancel it, cancel it, cancel it. That's a red flag, man. If your agent says cancel that, and they're not looking at the details. I had a client last week. They're in Maryland. They're in Silver Springs, Maryland. And they had a policy they got three months ago. Brand new policy.
Wow. I
said, you mind if I take a look at it? So I open up the policy. I'm looking at the policy here. I'm looking at the way it's structured. I asked the question. I said, what was the purpose of this policy? You have a $1 million permanent policy, a $1 million permanent policy. What's the purpose of this? To build cash value. I said, okay, so why do you have such a high death benefit? What do you mean? Wow. And I educated her and her husband on how to properly structure that policy at $700 a month in a way where it maximizes growth. They had access to cash at year 8.
Wow.
And they wanted to build wealth. So 8 years till you can touch it. So I simply showed them a policy, same premium per month, way lower death benefit, less commission for the agent, that was structured in a way where they had access to cash year 1. Wow. And the growth was more than twice the amount of growth in the previous account. So again, just asking the right. That policy was the wrong policy for that client. It was improperly structured based off what they want. So it's my job as an insurance professional to be a partner with my client, because this is not just some wham bam thank you ma'am type of transaction. Right. This is a hey, we're getting married. I'm your professional life insurance agent next 10, 15, 20 years. You have a question, you text me, you call me. White glove service, I text back. We work on weekends. Is today Saturday?
Today's Saturday.
We're working on a Saturday. We work Sundays. We work Saturdays. You want a professional who's going to be there when you call and when you text.
Yeah. That's amazing, even the fact that you just educate them so much. But guys, we're going to wrap up here now. I hope you guys got a lot of great information. But how can someone reach you? If they want more information, there was a couple of things we didn't get to go too deep into on this live here, but if they have more questions, what's your IG, your website, Absolutely. Your phone number, so that they can actually reach out and get more information?
Absolutely. I'm working with a couple of agents here, guys, in Atlanta, Georgia. So we got Chandra McNeal here, and you see the number here, 706. Is that 871-1006? I'm going blind, right? So contact Chandra if you have questions. If you're part of her network here in Atlanta, Georgia. If you follow me on Instagram, Sold Out Servant. My IG, if you follow me on Facebook, you have my contact information. You can DM me if you have questions. I'm licensed in over 41 states. If you're in a state that I'm not licensed in, I can get licensed in that state if it makes sense. And our overall goal here is to educate clients. Follow Brittany Stokes. I believe your Instagram is what?
BRIJFULL.
So if you're part of her network also, guys, Brittany Stokes is also a licensed professional, and she's actually one of my up-and-coming stars in my organization. So she's very well versed on these concepts, infinite banking, serving families, one of my top performers of all, and families being served. And I will say this here, guys, at the end of the day, our goal was to help educate clients and serve families. We believe those who serve the most always earn the most. So from an entrepreneurial perspective, we're both entrepreneurs. We believe that if we're going to make change in our community, it starts with us. You got to be one first. Be educated. Understand how money works. Take time out of your day to say, hey, let me seek out some wisdom or some knowledge here. Become one. Become educated. Become a catalyst for your community. Once you do that, bring one. Refer somebody. Refer a brother or a sister. If you're a client of Brittany's, refer someone to her. That's how you make change. So once you become one, right, you bring one, refer one, right? And in that case here, next level is building one. And so we are expanding in the Atlanta market here, Atlanta, Georgia. If you're watching this here, you're in Atlanta, Georgia. Brittany's out of the DMV, DC, Maryland, Virginia market. I've got offices in Ohio. I've got in Columbus, Ohio. I've got offices in Riverside, California. We're in Hartford, Connecticut. Different locations we're working on here. But overall, if you have questions about what we do, guys, we are growing it as an agency. Our goal is how do we teach more families about money and finances. Her background is real estate. My background is technology. Never thought in my lifetime would say that we're life insurance agents.
Never.
Never. But we are a different type of agency servicing a different type of family, guys. With that being said, guys, have a fantastic day. Looking forward to speaking to you soon. Connect with us on our Instagram or Facebook or through the phone. Thank you.
Bye. Thank you so much.